In our last video, we talked about the difference between saving and investing. We learned that while saving keeps your money safe, investing is how you make it grow. But how, exactly, does that growth happen? Today, we're going to dive into the most powerful concept in all of finance, a principle so fundamental that Albert Einstein reportedly called it the eighth wonder of the world. That principle is compounding. What is compounding? At its core, compounding is the process of earning returns on your returns. It's not just your initial money that's growing, it's the interest or investment gains from that money that also begin to earn their own interest. Think of it like a snowball. When you first start rolling it, it's small and it grows slowly. But as it picks up more snow, it gets bigger, and with every turn, it picks up more and more snow, causing it to grow faster and faster. That's compounding in action. Your money is the snowball, and the returns it earns are the snow. The magic of compounding is that it turns small, consistent efforts into a massive force over time. It's not about big one-time wins. It's about a relentless, exponential process that works in your favor. The three pillars of compounding. For compounding to work its magic, you need to understand three simple pillars. First, and most importantly, is time. Time is your greatest ally. The longer you give your money to grow, the more powerful compounding becomes. Let's look at a quick example. Investor A starts investing $100 per month at age 25. Investor B starts investing $100 per month at age 35. Assuming they both earn a 7% annual return, by age 65, Investor A will have a portfolio worth over $260,000. Investor B, they'll have just over $120,000. The difference of just 10 years at the beginning resulted in more than double the final amount. This is the power of time. Second is consistency. Compounding doesn't work if you stop feeding the snowball. Regularly contributing to your investments even small amounts like $20 a week is what keeps the snowball rolling. Consistency over time beats timing the market every single time. Third is the rate of return. The higher your return, the faster your money compounds. A savings account with a 1% return will grow much slower than a diversified investment portfolio with a 7% or 8% average return. While risk is always a factor, the goal is to find an investment that offers a respectable return so compounding can truly kick in. Compounding in real life. Let's put this into a few real-life scenarios. Imagine you reach 20 years old and decide to put $5,000 into a diversified stock market fund that earns an average of 8% per year. By age 30, that initial investment would be worth over $10,000. By age 40, it would be over $21,000. By age 60, that same initial $5,000 would have grown to over $95,000 without you ever adding another dollar. That's nearly 19 times your initial investment. Now, imagine if you added just $50 per month to that initial $5,000. By age 60, your total contributions would be just over $30,000, but your account balance would be an astonishing $430,000. Your money earned more than 10 times what you put in. This isn't magic or a secret trick, it's a mathematical law. It's the most reliable engine for building wealth that has ever existed. The dark side of compounding. So far, we've talked about compounding as your ultimate financial superpower, but this same power can work against you if you're not careful. This is what happens with debt. Just like your investments earn interest on interest, your credit card debt, student loans, or mortgages charge you interest on interest. A small debt today can balloon into a massive, overwhelming amount over time. This is why we talk about fixing your financial foundation first. Because if you have high interest debt, its negative compounding can erase any positive compounding you're trying to build with your investments. So, remember, compounding is a force of nature. It can either be your greatest ally or your biggest enemy. Your ultimate financial superpower. So, what's the big takeaway? Compounding is your ultimate financial superpower, but it needs one thing from you: patience. It won't make you rich overnight, but over years and decades, it will turn you into a financial powerhouse. The secret isn't a complex strategy, it's simply starting now. If you're ready to start your own snowball, hit that subscribe button. In our next video, we'll talk about the biggest threat to your money and to the power of compounding: inflation,